right, welcome back. Today is Friday, April 8th. Joining me again is Steve Straza of All Star Charts. Steve, how are we doing today?
Doing well. How are you?
Not bad. It's Friday. The markets are closed. We got the weekend to look forward to. I mean, it could be worse. But let's get right into it, right? Another down week for stocks. The Russell 2000 led to the downside, falling about 4.5%. NASDAQ was pretty bad too, about 3%. S&P 500 fell about 1%. Looking at the S&P 500 daily chart, you had kind of this failed breakout. That was a key level. You know, there was a cluster of resistance there, whether you're looking at Fibonacci or moving averages. You know, failed breakouts can be deadly. And, you know, while it hasn't been that sharp yet, it hasn't been great. And we've been kind of trapped below that level. And, you know, caution is a little warranted as long as we are below that. So moving on to the Russell 2000, pretty bad too. You know, it kissed that level last week, kissed the VWAP, that 211 level that we have been talking at length about, and it couldn't do it. And here we are closing at the lows of the week. NASDAQ, just as bad. I mean, couldn't even hold the VWAP from the March low there and closed on the low of the day, the low of the week. So kind of a bearish picture there at the index level. At the sector level, things were pretty interesting. We saw quite a bifurcated market as far as sectors go this week. But we'll get a little more into that later. But you saw a lot of the defensive areas. You know, you had healthcare, energy, staples, utilities, all doing really well, while some of the more risk-on areas and sectors like tech and consumer discretionary were at the bottom of the list there. And, you know, here we just have kind of a different view of some of that bifurcation. You know, you had the risk-on areas like transports and semis and banks and high yield even. You know, they're all performing really badly on a relative and absolute basis. Steve, you want to talk about that a little bit more? I mean, how about transports this week? Just absolutely killed.
Yeah. So you're slowly losing all of like the key economic stocks, right? I call them their economy stocks, right? Whether it's the banks, the semis, home builders, these are stocks that you'd expect to do well during good economic times, right? So it's always nice when these areas are working. Some would go so far as to say things like, you can't have bull markets without financials. I know plenty of smart people who believe that. You could probably argue similar things about semiconductors, transports, et cetera. So seeing selling pressure hit such critical areas of the market is concerning. And that list is growing, right?
Right. I mean, it was the transports, semis. Today it was high yield breaking down. And, you know, there are areas that are working. So let's look at some of that strength. Obviously, that sets kind of a risk-off tone. It's not something you want to see if you're a bull. But there are areas that are working, so let's take a look at some of those areas of strength. You know, we noted before energy kind of poking its head up. Utilities, new all-time high this week. Healthcare, also a fresh all-time high. Staples. And, you know, so many of those sectors breaking out, you'd think it'd be a good thing, but here's a heat map of the S&P 500 that shows the 1 week performance. And you can kind of see there that, you know, healthcare, consumer staples, utilities, those were the only real green sectors. And the biggest sectors, you know, your tech, your consumer discretionary, communications, those are still struggling. So while you do have pockets of strength, they're really not big enough in the S&P 500 to really pull the weight, right?
Yeah. And, you know, weightings aside, what kind of stocks are investors buying right now? They're buying defensive stocks, right? So we're seeing a true flight to safety. I think this chart really does a great job of illustrating what's going on. A lot of times we'll say, okay, and what I'm talking about is when we see sectors like staples, utilities, real estate outperform the overall market for sustained periods of time, that is evidence of risk aversion, not risk-seeking behavior. That is characteristic of a bear market, not a bull market. So typically in healthy bull markets, you'll see these sectors underperform, and that's normal. That's healthy. Now they're starting to outperform, and we're actually seeing it on a sustained basis. There were periods towards the end of last year where we saw some, surges in relative strength from these groups. but they never were really able to string along a significant enough streak of relative strength to really, get a red flag going in our minds. But now if you look at these relative trends, really nice bases, these are reversal patterns and they're resolving higher. That indicates, technically speaking, that these trends are going to run for a while. If we get outperformance from these groups for a while, it's probably happening in an environment where the broader market's under pressure. So bulls want to see these bases fail fast.
Yeah, and you mentioned that we've seen a little bit of this before, but this is all happening. They're all breaking out kind of together. It seems like, right? You have all those defensive areas breaking out together, while all those risk-on areas are underperforming it and hitting new lows like that. So that's really a kind of bearish tone to things and kind of late cycle. But I got a question for you. So a lot of people have been talking about the breakout in utilities and what it could mean for yields. I know you have this chart of banks versus utilities and the 10-year yield. You want to walk us through that one?
So the reason this is a cool ratio, people are probably thinking banks and utilities, they have nothing to do with one another. Exactly, right? One of these groups, the numerator, the banks, these are stocks that tend to do very well, historically speaking, probably the best of any stocks during rising rate environments. So that's why we have banks in the numerator. We have utilities in the denominator because they're a bond proxy. We just talked about it. They're a defensive group. They tend to do better in environments where bonds are doing well and rates are actually falling, right? So if we look at a ratio chart of these two groups, it should move in the same direction as yields, and it does, over the long run. So we use it as confirmation to kind of confirm or disconfirm or disprove our thesis on rates. When we look at the 10-year yield right now, what a nice run it's had since early March. This ratio should be moving higher. Instead, it's completing a topping formation and resolving lower. And this isn't the only intermarket indicator that is kind of suggesting to us that maybe we do want to start questioning this move in rates a little bit.
Yeah. We've identified all those areas of strength and weakness. What are some of your favorite opportunities in some of those stronger areas of the markets? Your healthcare, your energy, your staples. What stocks caught your eye this week?
So it's not just the three super defensive groups that we've already talked about, but it's healthcare too. Like you mentioned, it's really the safety trade, right? They're looking for quality, low volatility. You have a nice yield. That's great too. So Johnson & Johnson, your Mercks, your Pfizers, AbbVies, large cap healthcare, international healthcare, working really well. Big pharma, Bristol Myers breaking out of a really nice base, as you know. But it's also stocks like Walmart, consumer staples. It's just consumer stocks, safety stocks. So a lot of nice bases here.
Is Walmart a staple?
I don't think it technically is. I think it's probably technically discretionary, but it's a staple. It's like a grocery store. Kroger, you know what I mean?
Right. A lot of those grocery stores have been picking up lately too. You got a lot of strength out of the energy sector. XLE broke that 79 level that has been resistance dating back to 2016 today, closing at a 7-year high, I think. That's interesting given the fact that crude oil is still about 20% off its highs. So you're seeing that resiliency from energy stocks. And I know you continue to love your energy stocks right now. Why don't you walk us through a few of your favorites?
Well, what a clean chart XLE is, right? We stopped and paused exactly where, you would expect us to stop and pause. Very logical level at the former highs, like you mentioned, coiled up nicely. And today it really looks like we're seeing a pretty explosive upside resolution. And you're also seeing, similar patterns play out in some of the top names. One I like that is Oxy. You can't see it too great on this chart, but if you go to the next one, you'll see the flag kind of coiling. We resolved out of there today, closed at new highs. And you can see how, this is just textbook, right? You have a nice primary uptrend already in place. Got Berkshire Hathaway buying $6 billion worth of stock, putting a really big bullish bet on this name. Then we're coiling for a while, building up energy for the next leg. Looks like we're getting that move now. Let's look for follow through next week. But this is one of the leaders in the space. Just a great way to kind of bet on that whole energy leadership theme continuing.
Yeah. Well, here, I got one for you. Bristol Myers kind of jives with that whole healthcare theme and pharmaceuticals in general. What's the pharmaceutical ETF? What is it, PJP?
XPH is one too, I think.
Yeah, something like that. But either way, I'll throw up a chart. It looks great. Bristol Myers, definitely a big one in there. Look at that weekly chart. I mean, you got a little cup and handle going on. And this is a very long-term chart, you know, so you got to give it time. But as long as it's above that, yeah, I mean, as long as it's above that 77, 78 level, whew, looks good.
It's like one of those .com bubble bases in the tech stocks, breaking back out above what, 99, 2000 highs. It's 20 years in the making, baby.
Yeah. Well, Steve, thank you so much for joining us, and we'll do it again next week.
All right, dude. Have a good weekend.
Thank you guys for watching. If you enjoyed the video, be sure to click like and subscribe, and we'll see you again next week. Thanks.